Hey guys, in today's video I would like to take you guys back to Friday's NFP event and show you guys in a very simple way how I followed these 3 easy steps to secure over $2,000 in one trade, and so can you. If you stick around to the end of this video, I'll show you another technique that I use or you could use to find your daily buyers and targets in a very simple manner. Don't go anywhere and I'll see you right after this short intro. In this video, I said I'm going to take you through 3 simple steps to find an A+ setup and secure good profits. First step that I'm going to use is it's very important for any trader to know where are you trading from, and it's normally the simplest way is to go to a higher time frame a day. I'm trading small time frames, I'm trading the 1 minute or 5 minute, but I'll go back to the daily and 4 hourly to make sure I'm on the right side of today's play. In this case, what I've done last week for NFP and even on Thursday is I went to the daily and I said, all right guys, where are we trading from? And it's quite clear and it's simple. So just to take you guys through it, you can see there was a fair value gap that formed here. Price went in it, respected the fair value gap, and that to me is a clear bullish formation or bullish behavior. So in this point of view, I said, you know, whatever we do, I'm not looking for any shorts. I'm just going to look for longs the whole week. And then this was Friday, Thursday, Wednesday. We did a clear, aggressive move through these highs. And that on its own is a break of structure. And break of structure, let's just call it that so everybody can see it. This was a fair value gap. Alrighty. And then, sure enough, we created a new fair value gap. And you'll see this one's a bit smaller. And I'll show you now why it was smaller there. But in this case, I'm bullish from here. We went through, break that structure. We should still be bullish. I know this is all-time highs, but there's no other targets up here where I can, you know, build my framework on to say where we're going or where liquidity is. But in this case, we create a new fair value gap. And for as long as price stays above the 50% of this fair value gap, I'm going to be bullish. Even if it spikes below that, as long as it does not close below my fair value gap that formed. Same here. It spiked through it, it did the damage, but it all closed back above the 50%, showing a willingness to go higher. This case, same thing. I don't know what's going to happen this week, but I think for this exercise, I want to take you through what I've done for Friday. Normally I don't trade on NFP, but the setup was so clear and so A+ that I could not resist not to take it. And for those of you who follow my community on YouTube, you will see I've posted everything there from where I entered all the way to take profit. All right, so now we've determined where we're trading from. We're trading from a fair value gap. We're just going down to the 4 hour just to make sure we are still within the bias. And in this case, I've narrowed this down to this fair value gap here. And that was just to make it clear. And this is, let's leave it at that. And here you can see that dotted line, there's the 50%. The NFP spiked down to it, and I'm going to explain this on a lower time frame now. There you can see it run that high. Everybody who think we're going long and everybody who was on the short side got stopped out, and everybody who was long got trapped. They would normally put their stops below this low. They got stopped out. In my mind, I just sat back, didn't trade it, and just waited and see what's going to happen. We saw this big up move and this move down. My next step for this trade, now I'm very confident if the NFP would have smashed through this fair value gap and closed below her, I would have had a different, maybe not even traded. wait for this upcoming week to look for a short going down to this fair value gap down here, or even this liquidity sitting down here. But now we're still long because we're respecting fair value gaps, so there's no reason for us to go short here. Okay, let's jump to a 5 minute and I'll show you guys what I saw there and what our retail traders managed to see the opposite of me. Okay, here we've got the 5 minute chart. So what I wanted to show you guys here is a retail trader would have seen the following. Okay guys, here we've got the 5 minute chart. So what a retail trader would have seen here is this is liquidity down here, but don't worry about that, I'll make a separate video for that. But the highs here was spiked through, and then they would have seen this big push down. And just to make it, let's close all of that. Saw this big push, aggressive push down. They would have marked all these lows out as breaking structure, and now they would try to evaluate price to go short, wait for a pullback, and then try to sell it. And that's exactly what happened here. People would have seen, oh, okay, we're getting close, we're rejecting it, let's get in short, and yeah, didn't play out that well for them. All right. So what I want you guys to understand, once you know where the market is trading from, you need a reason to validate that the direction is almost 100%, or it makes sense. There needs to be some sort of narrative, all right? So my first step was, where do we trade from? We know we're bullish from fair value gaps. Okay, so where to from here? You then need to look for the next big liquidity. And where would that be? Normally it will be equal highs, equal lows. But on days where there's big news drive events, in this case, you see this big spike up and then drop down. This spike triggered people in long and stopped any shorts out. So let's just put that there. So anything above this high is another strong, big, guaranteed liquidity pool. I cannot stress this enough. And if you want to trade successfully, you need to get a feel with where the next big liquidity is, because you need to think like a market maker, or I don't know what they call it, the central banks, or whoever's driving the market. You need to think like them, and that's the 1% trader. That's not retail. Retail thought we're gonna go short here, and you'll see what happened after that. So once we've seen this big drop, and just rejecting this this dotted line here, which is our 50%, I'm just waiting for all of this. When I see this, I said, all right, so now I'm looking for any buy setups, because I know my liquidity sits and wait for me up here. Can it, reject from here and drop? Of course it can. I mean, it's not 100%, but from my experience, I've seen so many charts, thousands of these charts, where you can, it's not just NFP, you look at any FOMCs, interest rates, all those big events where they create big spikes or manipulations, price tend to return back to that before it goes in a different direction or goes right through it and just keeps running. All right, so now we know we want to go up here. Now that we know we're bullish, we've got liquidity in sight, where to now? Now you need to look for your entry pattern. Now I've got a bunch of entry patterns that I use, and you don't have to use all of them. I just use all of them because I look at which one stands out best for me, and sometimes both of them are there. And I'm going to take you through two of the entry patterns that played out very nicely in this chart on Friday. But I took one entry and I stuck with that entry. You could have taken multiple entries, scale in, and you really could have done well. You could have, if you had an evaluation account, you could have passed this account easily on this trade. All right, So now we've seen this big drop down. Now, if you look at my other videos, I'm talking about the ICT swing point. Now, the ICT swing point is, let me just take this off. In this case, you get 1 candle, 2 candles, 3 candles. There's 3 candles. It's the middle candle that's higher than the 2 on either side. That's a swing point. But I use it differently because I find it more successful in a different manner. But in this case, push down, there's your first swing point that formed right there. And then there's another swing point there because this candle and this white candle highs are lower than the middle candle. So that's a swing point, that's a swing point. Aggressively push through it. Now you want to see something retrace back. Now if you take your Fibonacci, and I'll give you guys my settings on the Fibonacci's. Yeah. So I'm taking that high and this low. And the reason I take that high and not these highs, if you go down to these highs, nothing pulled back, and you just keep pushing it up to the next high, waiting for something that pull back under the 50%, and that is normally where you want to buy under the 50%, because that's where you get your value from. That value means you buy at a discount. So anything about a swing's midpoint, which is at 50%, that's discount. That's where you want to look to buy. But what do we look for? We then look for more confirmation. In this area where you want to buy, sure enough, there's a little fair value gap. If I can grab it. And that fair value gap normally tends to hold price. Now look how perfect the body is. Okay, that body went just below it but jumped right back in. How it holds. So that is a very strong confirmation that price is aggressively holding a certain level to go higher. All right. So, and we're still targeting this higher. So there was your first entry. I'm going to leave this up here so we can see that was your first entry, and we'll make it a different color. I want to show you how many entries there were on Friday. Okay, so that was the one entry, taking it off that low to that high. That's it. Now there's that high there, and there's a low here. There's a swing low there. There's a swing low there. But this swing low was the last swing low that formed before this aggressive move, closing above. So that's another break of structure. Maybe I don't want to put too many lines, but I'll just mark the break of structures out like this. So we're all on the same page. And what you could have done here is mark that low. And again, there's a fair value gap there. All the bodies hold, but they all spike into the discount zone. In the discount zone. So what I'm going to do, I'm going to mark out this because that was our second entry. And remember, we're still targeting this high. Okay. And remember guys, this is on a 5 minute. If you go down to a 1 minute, you will see even more entries. But people will tell me now, says, okay Neil, we've entered here, that entry will still be in play. This entry would get stopped out here. Okay. If you take this Fibonacci, if you enter below 50%, and I'll share this, I'll show you guys the setting of this. Normally you take profit at this 0.27 because that gives you a 15 to 10 if you take the 50%. If you go lower, that's a 2 to 1. And that's all you need to be profitable. You don't have to wait all the way up there. So yes, if you took a trade here and you put your stop down here, you would have got stopped out. But if you left your stop down here, there would still be enough for you to, you could either have taken profits here, wait for something to come back, and this I'll show you was another nice entry. All right, so that on the 5 minute, just using the discount Fibonacci 50%, nothing else. You're not looking at anything else. Okay, there was confirmation there with fair value gaps, but there's 2 entries for you there. All right. You could go further. I mean, you would have got stopped out here if you'd taken another trade, from these lows up to there, because you break a structure here. You've been in -1 there. And but ultimately, 2 early trades that could have easily taken you up all the way to there. Let's just do this. I just want to show you guys, because so this is a 3-to-1, an easy 3-to-1 all the way to the top. This one was a, let's just take it. Okay, that was from there, that's fine. And this was another 3.5-to-1, 3.1-to-1. So there's 2 3-to-1s. I mean, if you played aggressively here, I mean, risking, I don't know, $500 each, $3,000 was easily targeted. And I'm not telling you to over leverage. It's so I risked, I think, $300, and I made $2,250. Okay, so let's take those off. What I want to show you guys next, I mean, there's so much I can show you here. I mean, if you look at my ICT swing point strategy or formation, I mean, that is a very simple strategy. But what I need you to understand is you got to buy and discount here, and if you do that, you'll never go wrong. You can be very aggressive and take the swing points. And this is a swing point here, but this does not qualify to the swing points that I'm put out there. This swing point here, where there's 2 consecutive down candles and a white candle, the third candle is a white candle or an up candle closing above this candle's open. That to me is an entry right there with the stop down here. So if you had to take this one here, and you put your stop down here, I mean, all the way up there, that's a 4.6-to-1. So there was plenty. I wouldn't have taken this because that's not following my rules, and not this one because that's a white candle, black, white, so I wouldn't have taken that. All right, so there was 3 entries here. What I want to do next, I'm going to take this off, but what I want to show you guys, and we're going to go down to a 1 minute now. And just for those who was wondering how you could have, benefit from this. If we go down to a 1 minute, I'll show you what this looks like. Okay, here we've got the 1 minute chart, still that highs up there. Let's make it a little bigger. So now this is a very interesting entry point, and this is such a A plus, and this is the entry I took. This was my A plus setup, and I've looked at this. I've missed all of this price action up here, and I see it's confirming, it's breaking, it's doing what it needs to do. I'm happy on a 5 minute. I came to the party late. I was like, okay, let's see what have I missed, and I saw this. In this area here, there's your fair value gap. And let's call it that so we can reference to that. That is your fair value gap. Then I saw these lows forming liquidity, and then this aggressive runaway. Remember, this aggressive runaway was retail thinking we've retraced, now we're going to go down. Anybody who's trading 1 minute, they saw this and they're like, all right guys, we're breaking structure, we're going lower. And then this thing just dropped. When it came down here, I was expecting price to hold and not to do anything further. Then I've looked for my entry pattern, and I mean, in this case, I could have waited for a structure, pull away, pull back, and the normal find a midpoint discount, all of that. But because I saw this fair value gap and these liquidity building up here, I was expecting something to form here, an inversion, fair value gap, or this pattern here, where you get, in this case, there was 3 black candles taking all those lows, and then a white candle closing above the swing points open. Now, and you guys can go to my community tab to see how I've entered this. I've entered right here, and I took my long there. I put my stop down here, and I went all the way up here, and that was a good 7, almost 8 to 1. And then it came back, it tested, and we went off to the races, and then I just left it. The minute we took out this high here, I mean, remember, you don't have to be greedy taking these trades. I'm not saying, I mean, I know I'm very confident that we might go for these highs. Even though it was a Friday, I would have seen this to go up in there, trick people into go long again, because people think, oh, we were short here, we got stopped out, okay, we were wrong, let's buy, and then trap people in for the weekend, and then we'll see what it does next week, in this upcoming week. But in this case, when we hit this level here, I was at break even already. So if this trade had to come back, I would have, at break even. I haven't gained anything, I haven't lost anything. But this is where you can take some profits off. And then I wouldn't suggest trailing your stop losses, but I just sat through and wait till after lunchtime, and sure enough, guys, we touched that. That's a liquidity. Remember what I said, this is liquidity up here. Now, it's Friday, you know what my pattern is. This pattern, white candle, black candle. This could have been, I didn't take it, but if you follow the strategy for my swing points, there is another entry for you. And yeah, you can target your 2 to 1, which was this low here, or you could have tried to go for these lows here. I'm not, this is after the fact, I can't tell you, I just now took the first trade, but this is what you could have taken as well. And what makes it more powerful, guys, we had a nice inverted fair value gap here. That is a high probability, or another high probability entry right there, where you keep your stop just above the fair value gap, and then you take to the next to this low. And then once you've broken this low, which we haven't till I think here, that's where you go to break even, and then you target the next, and then you can look for some gaps. There's gaps here, there's relative equal lows, and it went all the way back, and then it just went sideways. So that is it all in a nutshell. And I remember in the beginning of the video, I've said that I will show you guys another trick, if you can call it a trick, or different structure that I use on the dailies or higher time frames, even 4 hours, to understand where are we going next. All right, so this is what I'm talking about. So in this exact example, you will see, and guys, this work on any, I know this is a 1 minute, but I'll show you now it works on any time frame. We can pick any, you can go back and test this and see. If you look at any liquidity that gets taken, and you get this formation. In this case, it's a white. It can't be a white candle, black candle, black candle. It's got to be a white candle forming the high, taking liquidity, and a black candle closing below the open of that middle candle. The probability for the next candles to take the lows, are very, very likely. So if you're on a daily candle, if this was a daily candle where you took liquidity, and on this day you close way below it, you can expect price to pull back the next day, and it's normally into London, and you can then look for shorts targeting that low. And on a daily or 4 hourly, if you trade 1 minute, there's more than enough space for you to make an easy 2-to-1, 3-to-1 risk reward. But this is a very, very easy way finding where the next liquidity draw is, and that's the next low. It won't go. It's very rarely that it reverse. If you got it wrong, here you can see you take liquidity here. It's 2 black candles, a white candle. Price comes back to test this, but that candle went down and took out that high. That candle then went down and closed above that. That candle went down running those liquidities, but closed back. So it's not 100%, but I can tell you 80%, 90% of the time it works. Here's another one. We take that liquidity, white, black. It goes back in it, but then take that low. It slightly pull back, and then it just drops. So if you take it on, okay, let's look at this. Let's go to 4 hours quickly. Okay, here's a 4-hour chart. I just want to look at, here's a simple example. Here's a white candle. It's in a fair value gap. It's holding price, and it closed aggressively down. Then the next candle opens. There's no pullback, but if you go down to a 1 minute, there's most probably some sort of entry there to take you to those lows. And that is enough for you to make good money from that. Here's another one, white, but then there's a big candle taking all this liquidity out. But still, we took that low, we took the lows, and a little bit of sideways. This was late in the day, so don't worry. Look, it's not going to be every single candle on higher time frames, but I'm thinking, or I'm telling you, if you look at this black candle, white candle, close above, then it pulled back, but now you've got this high. And when price opens, it pulled down, give you some sort of, because that's a manipulation to go in the wrong direction, and then go and take that high out. This one took the next high, took the pull back, next high, pull back, and then pull back again. So there is, and look, there's opportunity out there. I'm just saying you need to be very specific what you want to do, and you got to be careful to not overtrade and try to find each and every swing point and try to take it. If it makes sense in this case, alright guys, we are long, we respecting this fair value gap. Okay, there's a black candle, white candle, but this white candle didn't close above there yet, but this one eventually does. Alright, so next candle, I'm targeting that high. It takes 2 candles, but we got there. Alright, now I'm looking for other highs. Okay, so this one manipulate down, but close higher, all the way to the ultimate highs. Because you're bullish already, you can look for these things. If you don't see it here, you can go to a 1 hour, but don't go 5 minutes and try to do a 1 minute on that, because that's not going to work. The risk reward's not going to be big enough. You got to go even on a weekly or daily or 4 hourly or even hourly, and then look for something with a decent pullback that gives you a good entry on the 1 minute and target those next highs. Alright guys, I think this is what I have for you guys today, and thank you for joining me. Please don't forget to like and subscribe to the channel.